Very good afternoon, good morning. Welcome to our HYCM live market analysis with myself, Giles Cochran. Hope everybody is doing well and you can see my screen and hear my voice okay. Any issues, please just let me know in the chat. I have to have a slightly shortened session today as I need to get away quite quickly. So I will get stuck into the webinar as soon as possible. Now, a couple of things to note today. Don't forget, as we talk about different entries and exits, the whole perspective of this is from a trade education perspective. The idea is you look over my shoulders and you see how I go about trading significant data points, and that's how we're looking at trading this. And it's not a trade signal service is really the key point to take away. We'll be looking at a few different impacts of major data points, and talking of which, we've had a major data point just being released now, so I'm going to cover that straight away. I'm going to jump over to my main screen and look at the other charts. Now, just wanting to see here what's happened. We have just seen a very big New York Empire State Manufacturing miss, minus 31.3 versus the low of 3 expected. Now that is a very, very big miss, and the slowing growth could well mean that the Fed are much slower in hiking interest rates. So I just want to see how markets are reacting to that, and then I'm going to go back and show you what the major sentiment is. Now, what we've seen is a quick flush low in the US dollar. I expect 10-year yields have made a move on this. Yeah, you can see 10-year yields are sort of just pushing lower. Markets sort of work out what to do with this data point. In terms of our understanding, just be aware that the manufacturing index will go into the ISM data points that we've got coming up later. So a slowing figure here is really quite negative. So you'd expect that to be negative for the dollar, negative for 10-year yields, negative for dollar yen, positive for gold and silver. So just very, very interesting to see that reaction that we've seen in markets, and expect that to result in sort of downside silver, upside silver, upside gold. We'll see how the market reacts. It's not a major data point, so it's not something that I'm looking to obviously trade at this point, but we just need to keep it in mind. Now, the major sentiment shift we've had this morning is the Chinese retail sales data. You see that came out very, very low, 2.7% for the year-on-year retail sales print. 4% was expected as the low. It's come in 2.7%, which is really quite negative. Also, industrial production down below forecast, and the fixed asset investment also low and down below forecast. So very negative sentiment. That has weighed across the markets over the session. So we can see the yen and the dollar finding safe haven bids this morning. CAD, New Zealand, Australian dollar, all tilting lower. So for today, that does give us at the moment a downside bias in equities. It gives us there's downside bias in WTI and Brent crude on the news that the Iran nuclear deal may be about to go through. If it does go through, you'd expect another little flush lower in oil, although a lot of that weakness has now already been priced in. If the US deny that a deal can be reached and that Iran's compromises aren't enough, and expect oil to push higher. Looking at the major currency pairs, we can see that the strength in the dollar has been weighing on the majors. The strength in the dollar has been coming through the safe haven bids into the dollar. We can see that the dollar yen had been pretty flat in the session with both the dollar and the yen bid until we started to see this move lower in 10-year yields. Now, with that manufacturing index printing lower, I'd expect to see that continue. So that means we can expect some continued yen strength. So that means there is at the moment a sell bias in the euro yen. That's reasonable to expect sellers in the euro yen. So if we saw a retracement today back up towards that kind of 136.14 region, that is suitable for going short today. Stops can just be placed above that 137.20 region. Don't forget, with the Rhine, we've got these areas of the Rhine. The Rhine is a major river through Germany. It's really the backbone of German industry. And there's certain areas, Duisburg, Cologne, Korb, where analysts have noticed that because the water level is so low, it can become impassable. And we have had that level passed in Korb down below 40 centimeters. So as a consequence, that has meant that there's been some negative sentiment for the euro, and the safe haven bids in the yen means that any retracement back up to that 136.20 region is suitable for going short at the moment, as long as sentiment doesn't shift and there isn't some other driver going in to the market. So just to be aware of that. Now, with that being said, today we want to now go and look at the calendar coming up, and it should be a pretty decent week. We've got a lot of big events. I'm going to run through the major events as well as major things to look out for. So first of all, Empire State Manufacturing Index, that's a big miss. Expect to see some fallout from that. That should result in dollar downside, should result gold, silver upside in the near term. But obviously, the risk-off sentiment is supporting the dollar still higher. So if the risk-off sentiment fades, then expect that dollar weakness to really accelerate. Watch out for it. Tuesday, we've got UK labour data. The last Bank of England meeting, the Bank of England projected the 2023 recession to come at the fourth quarter of 2022. They now expect 5 quarters of a recession for the UK, and there looks to be more downside in the pound. Now, this data is somewhat backward looking. It's going back to June. The claimant count change is July, but this shows a big miss. Then expect that to weigh on the pound, and you could probably expect something like upside in the euro pound, or downside in the pound yen would be the best expression of that. If it comes in well below market expectations, say sub 200,000 for the employment change, unemployment rate, say it's above 4%, and claimant count change, say that moves higher, sort of above 30 or 40,000, expect that to sink the pound tomorrow. Canadian inflation data, headline inflation coming in very high, 7.6% forecast, down from 8.1% last print. If we see July's core data, if we see that coming in above 6.2%, that will likely keep the pressure on the Bank of Canada to hike interest rates and should be supportive for the CAD, but a lot of that is priced in already. So the best opportunity will come from a miss. And in the if current sentiment remains, say we keep that risk-off sentiment and say that oil deal looks like going through, that does open up a US dollar CAD buy bias. So if inflation's a miss, below expectations, say it comes in 5.9 or lower for the headline for the core, and say the headline comes in 7.4 or lower, then expect further CAD weakness, but watch out for oil news. If that deal doesn't go through between Iran and US, then that can alter the outlook for the CAD. Industrial production data coming out tomorrow, that's going to be important in terms of seeing what's going on in the US with manufacturing, industrial production. Where is US growth heading? If these numbers start to weaken, expect downside in 10-year yields, downside in dollar yen to continue. Looking at the Australian wage price index, wage data is going to be important for the Australian dollar. And so is the New Zealand RBNZ interest rate decision going to be influential for the Aussie New Zealand dollar. If we see wage data dropping and we see a miss below 2.6% for year-on-year quarter and below 0.7% for the wage price index quarter-on-quarter reading, then expect that to weigh on the Aussie. If risk-off sentiment remains negative, that's Aussie yen short, Aussie US dollar short, that's the best opportunity. RBNZ, the best pair to trade the RBNZ is the Aussie New Zealand dollar pair. That's the go-to pair for the rate differentials between the RBNZ. Now, if you just take a look here, what you see is the Aussie 10-year and New Zealand 10-year yields. They're sort of a little bit elevated. So I am expecting the RBNZ to turn more dovish on Wednesday, so that should support the Aussie New Zealand dollar higher. But just watch out for volatility because you've got the wage price index just before I have got a long with my stop just below that 100 exponential moving average, looking for a move higher back up to that 1.150. It is a bit speculative. To, obviously, don't know what the RBNZ are going to do, but I do expect them to follow the Federal Reserve, follow the RBA, follow the Bank of England. I'm expecting a more dovish tilt from the RBNZ come Wednesday, in line with general global sentiment. Inflation rate will be key for the UK come Wednesday as well. If the inflation remains high, levels remain high, that will keep the pressure on the Bank of England. If it drops lower, that takes the pressure off the Bank of England. So the best opportunity will come from pound selling if the year-on-year data comes in like below 9%, and say the core inflation comes in below 5.5%, that will result in pound weakness. And I'd look to express that with a pound yen short if the risk-off sentiment remains off. If it doesn't, then something like a euro pound long. US retail sales, if we see slowing growth from the US consumer for July, that again will weigh on the dollar. So you'd expect downside dollar yen, upside in gold, upside in silver if we see the year-on-year sales come in below 7.5%, and if we see the month-on-month data coming in below minus 0.4%. If we get those two readings, you'd expect that to weaken the dollar, upside in gold, upside in silver, and you'd expect that to be supportive of dollar yen shorts. Aussie employment data, important on Thursday. Look for that. If we start to see, if that remains robust and the RBNZ have taken a dovish tilt, that could open up a really nice medium-term upside Aussie New Zealand dollar long. But if we start to see Aussie wage data suffering and it's slowing further, then we could see, potentially more downside in the Aussie New Zealand dollar if the RBA are expected to turn more dovish as well. So just look out for the Aussie and the New Zealand data points out this week. They're likely to influence the path of the Aussie New Zealand dollar. Friday, Japanese inflation data. Not expected any particular moves there, and retail sales data for July. Slightly better, the retail sales data. I'm expecting that to be a little bit lower. The cost of living in the UK is increasing with a nearly 100% increase expected in fuel bills over the next sort of 6 to 9 months. And inflation is very high at levels expected to peak around 13% by the Bank of England, and a UK recession. So wouldn't be surprised to start seeing retail sales data pushing lower for July. And if that is the case, then watch out for further pound yen selling potentially, or more euro pound upside. Yeah, short and sweet today. I've had to keep it nice and short because I've got something else to go to. But I will be back here on Wednesday, and what we'll be looking at on Wednesday will be the aftermath of that RBNZ rate decision. So we'll be looking at what the trade is after that RBNZ rate decision, as well as analysing the other data points that we have. For now, the most important thing to realise is that we've got that risk-off sentiment in the market, and that risk-off sentiment is being expressed with yen strength, dollar strength, CAD New Zealand, Australian dollar weakness. So in other words, looking to short Aussie yen, Aussie US dollar, New Zealand dollar yen, New Zealand US dollar, CAD yen, CAD Swiss franc, Aussie Swiss franc, and Aussie yen shorts all make sense. So as long as that risk-off trading remains, if it doesn't remain, then watch out for a reversal. But there's a few negative sentiments that are just starting to, build up. Very low water levels in the Rhine, very water levels in Chinese rivers. There's obviously the overhang of China COVID cases rising, very weak activity data out of China. So, markets just reading a little bit from that, and that risk-off sentiment that started gently accelerating now a bit further. We've had that US New York Empire State Manufacturing Index that should result in downside in US 10-year yields. So let's see how those 10-year yields have been going since we've been here on the webinar. Let's just have a look. Yeah, we can see 10-year yields remaining pressure to the downside. See the response in, yeah, and further safe haven bids. So we are really in risk-off trading at the moment. So looking at things like shorting Aussie US dollar, New Zealand US dollar, Aussie yen, New Zealand dollar yen, US dollar CAD upside. All of that makes sense. Pound yen, euro yen in this current market sentiment. But watch out for a reversal. Best opportunity like to come from WTI and Brent crude. So watch out for any denial from the US that there isn't a compromise struck with Iran and that they won't agree to Iran's terms. If that's the case, don't be surprised to get a little upside in oil. But if sentiment remains risk off, then expect any rallies to potentially find sellers. But there should be some sort of short-term opportunities. Likely, the risk obviously for outlook is that the deal gets signed and we see another flush lower in WTI and that US and Iran finally agree that 2015 US-Iran nuclear deal. So there's plenty going on. It's been short and sweet, but I hope that's been helpful. I will, of course, be back here on Wednesday. And thank you. Yeah, Kirash, thank you very much. I hope you have a nice day too. Thank you, everyone. Take care now and be back on Wednesday. Thanks, everyone. Bye.